Hello everyone. In this video, I will talk about my analysis on Burger King, which will be coming up with the IPO. The Burger King is a very familiar name for burger lovers across the world. Its parent company, Burger King Corporation, owns over 18,000 restaurants across the world. Burger King India has master franchise agreement to own and operate Burger King outlets in India. It's promoted by the QSR Asia, which owns 99.39 shares. Coming to the IPO details, the company already received Sebi approval for the IPO. The IPO is a combination of fresh issue and OFS. Company plans to raise 400 crores via fresh issue, which will be used for store expansion. Promoters will sell up to 6 crores shares via OFS route. The company is also looking for PIPO placement of 150 crores. If it happens, IPO size will be much smaller than this. Coming to the supply chain, the suppliers of Burger King includes Hyphen Foods, PepsiCo, Viva, Wendy's, etc. Burger King India negotiates directly with the vendors and involved in active management. However, the supply chain is managed by a third-party distributor called X. This arrangement helps to save the investing in infrastructure, logistics, and working capital. Food market in India is 4,096 billion and classified into two segments, the organized and unorganized. Organized market can be again classified into standalone outlets and chain outlets. Chain outlets can be domestic or international outlets which has more than 3 branches across the country. Today, unorganized player dominate Indian food market with over 62% market share. The chain market, while it's small with less than 8% market share, has grown at a speed of 18% CAGR in last 6 years. The chain market can be again classified into various sub-segments like QSR, CDR, cafes, etc. depending on the price per person, speed and service. Burger King India operates in QSR space, which is quick service restaurant. Coming to the competition, chain outlets has more than 100 brands with over 6,500 outlets spread across India. The competitors to the company includes the international QSR chain restaurants such as McDonald's, KFC, Dominos, Pizza Hut, Subway, and other local restaurants operating in QSR space. In this table, some important metrics with regards to competition are shown in this table. And some of the key observations are that the Dominos dominate market in terms of number of outlets with over 1,249 outlets across the country. The average price per customer and average ticket size is lowest for the Subway. All companies enjoy very high gross margin and all companies pay royalty to parent in the range of 3 to 8%. The McDonald's is the category leader in burger segment with 42% market share, and Domino's have 80% market share in pizzas. In QSR space, Burger King, KFC and McDonald's has the highest average sales per day. Same-store sales growth is a key metrics for any retailing firm, including food retailing firm. In last 2 years, SSSG for Burger King was 12.2% and 29.2%. It outperformed its peers Domino's and McDonald's. Westlife operates the McDonald restaurants in India. In this table, It's quite evident the value proposition for the Burger King is it provides quality food and not heavy on pockets. For instance, company has a lot of products which are priced under rupees 100 and runs lot of combo offers. From this table, it's quite evident that Burger King is most aggressive player in the market. The combo offer discounts on combo offers is almost double when compared to its peers. This is quick snapshot of the master franchisee agreement with parent. This master franchise agreement is valid till the end of 2039. On every new store opening, the Burger King India has to pay Burger King Asia Pacific a fixed fee of $35,000. And company also pay a renewable fees for renewing the license for the store, and also it pays a royalty of 5%. And this table shows the store expansion, and here it looks company has grown very fast at 98.7% CAGR. Looking at P&L, the revenue has grown in line with the store expansion, but the company is yet to break even. The losses are reducing sharply, and in very near future we will see the company turning around the operations. Hope you enjoyed this video. Please subscribe to my channel for more videos on finance and stocks. Thank you for watching. Have a nice day.